Hello traders and welcome back. I'm Natalie MacDonald and you're watching Sydney Direct on Dukascopy TV, where we bring you exclusive interviews with financial insiders to discuss some of the hot topics impacting APAC markets. And one of the biggest topics at present really is that China's stock market slowdown and concerns regarding China's economic growth. I spoke to Alaistair Chan at Moody's Analytics to find out whether or not he thinks the stock market has found its floor. Alaistair, many thanks for taking the time to chat with Dukascopy TV. Always a pleasure to catch up with you.
Good to see you too, Natalie.
Thank you so much. Okay, so let's get started firstly on the China eco data. Now we have pretty grim import-export data combined with a more moderate lift to inflation. It's all creating quite the mixed picture in terms of the economic outlook for China. How would you characterize this outlook at present?
Yeah, you're right. It has been quite mixed, but I think overall you'd have to say that the economy is quite weak. I mean, data released yesterday on industrial production and investment showed that there's still a lot of overcapacity in a lot of heavy industry, mostly related to housing, but also across related sectors like cement production and steel production. Then the only source of the only positive spot, I guess, was in the retail numbers, and they show that the Chinese consumer is starting to sort of ramp up their spending a little bit, but we don't think that's enough to offset the overall weakness in the economy.
Now, we saw the PBOC last week lower its Yuan fixing by its largest rate since August. Is the PBOC moving away from that more active intervention to prop up the currency?
Yeah, they're moving away from it. They haven't relinquished control of the yuan just yet. But since the August devaluation, they've sort of followed the market in terms of setting the daily fixing. So there is a lot more market influence on the yuan, but not in a free market sense.
Now, global market focus really is on that US Federal Reserve meeting taking place later this week. What impact and how much is that Chinese economic performance and also potential stock market performance tied into the results of this meeting, do you think?
For China itself, there probably won't be a too great an impact regardless of what the Federal Reserve does. There's already been quite a bit of pricing already incorporated into China. If you look at the capital outflows, a lot of money is actually leaving China because of in anticipation of higher interest rates in the US. So regardless of what the Federal Reserve does, I think a lot of the negative impact has already occurred, and we don't see much impact regardless of what happens this week.
And almost in a flip, a lot of sort of that decision on the US Fed has been sort of spawned from the Chinese stock market performance that we've also been noting. Has the stock market found its floor yet, do you think?
So the Shanghai Composite's fallen about 40% from its peak in mid-June. Right now, it looks like it's closer to fair value, but whether the stock market really reflects economic fundamentals is another question. I mean, if the economy continues to slide, if the government doesn't increase its stimulus measures, we think the stock market could fall further. But it really depends on how the economic outlook plays out.
Alaistair, thank you so much for the comments.
Thanks, Natalie.
That is all we've got time for right now, but many thanks as always to Alaistair at Moody's Analytics for his comments. I'll be back with plenty more exclusive interviews for you, but for now, it's goodbye.